Afternoon. Good afternoon. Is your neighbor back? Has your neighbor come back? Did he or she tell you will be joining the other session? Or are they expected? Please tweet them, WhatsApp them, and tell them that we have commenced, so they should join us for the second session of the day. My duty really is to invite on stage our session chair, who is none other than CPA.
I believe all of us had a break to go and take tea, especially after the wonderful presentation in the morning. Maybe you can just ask your neighbor, did you get a book like this? Yes, I can hear from the floor. Some people are still looking for the books. I hope you'll get. Just to clear as we start, I have an announcement. A car remote key was lost on Monday, 22nd of May, 2017 at Jomo Kenyatta Airport Terminus, Terminal D. Please, if you found it, kindly hand it over to any SPAC member or secretariat or any facilitators. It belongs to CPA Kintia. Phone number 0720-945453. I'll still make the announcement at the end of the session. As we start, I just tell you a story about John. There's this boy called John. The family had waited for a child for long. And as you know, the men were getting impatient. The man of the house was equally getting impatient. Then thank God, the mother announced that, oh, I'm expecting a baby. So the man was very anxious, and every time he would tell his friends, we are going to get a baby soon. So it came to the time of delivery, and we know the process at times takes quite long. So the mother went through the hospital, and the process was quite long. But at the end of it, the man was excited that he had a baby boy. Men, a lot of times, you go to tell your wife, so-and-so had a baby, and you ask, is it a boy or a girl? A lot of times men don't have explanations, as we just know it's a baby. So the man had a baby boy. The mother was overexhausted because of the process. So the mother told the man, please go and change the baby, because the baby had poo-pooed. In the families we have issues, and at times you find you disagree on a number of things. And in this family it was not exception. They had challenges and quarrels occasionally, and the man would call the wife stupid. You remember from the early session the speaker was talking about the stupid, and the wife would be like, okay, so who is more stupid if you've stayed with me all these years? But one time, as women and mothers, the mother got concerned about this child. The development of the child, the character of the child was changing. As we know, in my culture, when you have a sharp child, very clever, always number one in the class, he's like who? The child is like the father. So the child was like the father up to some point, then things started changing. So when the child is not smart, he's like who? He's like the mother. So there were a lot of blames that have been put on the mother, and the mother also wondered, hey, when I cut the nails of this child, they don't look like mine, they don't look like my family's, they neither look like the father's. So he has, did your uncle or some relative in your lineage had some of these character traits I see in this child? And he said, no, as we were perfect. This extended, And the mother decided to take the hard step of doing a DNA test on the child, just to get what is the issue, what is the problem, why is all this happening. And rude shock on the mother, she found that the DNA of the child was very different from the father and the mother. And she had to sit the father down and tell him, Daddy, I know we've had a lot of issues in the family, but there's something that has been worrying me. And I did my background check, and I realized that the DNA results of this child is different. So do you have an idea? This child is not our child. And the father said, you mean you don't know? But it is true. She's not our child. The mother was like, how? What happened? And the father explained. Our session today, I'll finish the story at the end of it. We'll be taken through on development in taxation and the role of professional CPAs. Will be taken through by none other than our learned friend, CPA Robert Wuihiu. He's an advocate of the High Court. CPA Robert is an associate director, tax and regulatory services at KPMG East Africa. He is a member of the Institute and in good standing. He also alluded that he's in good standing in the house. He's married and they have 2 children. So he's in good standing either side. He's passionate on tax matters and he has made numerous contributions in regards to this through public finance work streams of the ISPAC, where he served as a member in his capacity as a member and a tax consultant. CPA Robert has recently joined the Tax and Public Finance panel of ISPAC, where he is volunteering his time and technical skills in supporting the development and delivery of quality CPD training for ISPAC. Kindly let's put our hands together and welcome CPA learned friend Robert Wuihiu.
Thank you very much, CPA Samuel Okello, and good afternoon to all of you. Now, I realize time has gone ahead, but let me start by quoting Albert Einstein, who said that the hardest thing in the world to understand is income tax. Now, I find that interesting because this is a guy, for all his, how he was very bright. Remember, he's the one who came up with the formula of E equals MC squared. And to him, that was not complex. And I realized that he's also the guy who had 2 cats, like Peter would say. He had 2 cats, and they have holes. They had holes on the door, and he couldn't get it into his head that by doing one hole, by making one big hole in the door for both cats to go in, he could get both cats in. So what he did is that he made 2 holes, one big hole for the big cat and a small hole for the small cat. So when this guy says that the hardest thing in the world to understand is income tax, I sort of feel him. Now, the other thing is, like you've heard, I'm also an advocate of the High Court of Kenya, and when I listened to the earlier morning sessions, Dr. Matembe, Honorable Dr. Matembe, I couldn't help but think that I possibly am one of the guys who is perhaps headed to hell, being a lawyer and an advocate at the same time. But anyway, what I want to do this morning is just take you through the recent developments. I won't dwell too much in the interest of time on some of these developments, and then we can have an interactive session after that. So in terms of the outline, what has been changing recently, the Finance Bill 2017, I'll just give you a few highlights. The Statute Law Miscellaneous Amendments Act. Now that's an interesting one because a lot of us think about changes in tax law, and you think about the income tax, the VAT, now the Tax Procedures Act and what have you. But it's important to understand that these things are actually changing through other statutory instruments, and this is one of them. And then, we're going to talk about what's happening globally, base erosion and profit shifting. There's a lot of tax activism, and I'll tell you a bit about that. And then, what is your role and my role as a certified public accountant, and what does this all mean? And then we can have a question and answer session. Now, in terms of tax overhaul, you can see there we've had quite a bit of new legislation coming through. You've got the Excess Duty Act, the Tax Procedures Act, which consolidated the procedures, Tax Appeals Tribunal now, which is the basic or primary legislation around appeals. And then you've got the Value Added Tax Act in 2013. And all that has been between 2013 and 2015. So there's been a lot of activity. And I'm sure you also know about the Companies Act 2015. Now, one of the things that I found interesting about this Companies Act is that companies are actually required to file returns. They're not defined, they don't define what the returns are, but they're required to file returns with the Registrar of Companies. And I wonder how many of us are actually filing company returns with the Registrar of Companies. So that's an interesting one to have a look at. And then we've been talking about the overhaul of the Income Tax Act, and I'll be speaking a bit about that in a while. Now, in terms of the Finance Bill 2017, I guess you all had the changes that have come through, but the key ones, and the ones that perhaps would be of interest to us, would be expansion of the tax bands. Now, I find this interesting because between 2004 and 2015, they actually did not change those tax bands. So for about 12 years, we had the same tax bands. But in 2015, they changed the tax bands effective 2016. And then 2017, they've also proposed to change the tax bands again. I wonder whether this is going to be a trend that is maintained. But as you can see there, the personal relief now increases to roughly 17,000 shillings, and I hope that trend is sustained. Another one is the special economic zones. Now this one is an interesting one because for the longest time, this bill was not passed by Parliament, but we've got some very interesting provisions that have come through in the Finance Bill. And for me, the ones that are critical are the withholding tax rates. You see, the normal withholding tax rates, for example, on management and professional fees, roughly between 15 and 20%, depending on who you are paying to. But if it's being paid by an SEZ entity, that rate comes down to 5%, which I found interesting. The same thing with royalties and interest. So those are the changes with regard to the special economic zones. From an excess duty perspective, you will recall that Kenya's market share in terms of exports to the region has really gone down, and that's the main reason is because we used to adulterate our diesel with kerosene, and because of that, you've got now to get a license if you want to deal with illuminating kerosene or kerosene, and of course, if you export, then you get the duty drawback. Now, the other interesting one that I found, and maybe this is one of the reasons why people say that Parliament does some strange things. They put a high tax on alcohol and then raise other taxes, and that leads you to drinking more alcohol because you're stressed about the taxes that they have raised. But as you can see there, they have increased the duty on alcohol and cigarettes. And actually, the one for cigarettes is quite amusing because I think it makes it a bit more complex to comply with this regime, because previously you only had one excess duty regime for cigarettes, whether they had a filter or not. But today, you need now to distinguish between those two products and account for that separately. Now, I guess another interesting one was all accessible goods must bear the excess duty stamp. And one of the things that I ask myself whenever I see some of these changes in the law is how practical are some of these things? Because, for example, how do you affix an excess stamp on a can? You know, like if you've got a Coca-Cola can or a Tusker can, how exactly do you affix an excess duty stamp? I don't know how that's gonna work, but that's the law. And then, of course, CPA June Kibindu talked about the goods or local materials for manufacture of sanitals. So that's another change that came through. Now, one other thing that you'll perhaps be aware of, and I find this interesting because even the Inspector General of Police would have to go to get a court order to access your bank account. I suppose it's only your wife who doesn't need a court order to access your bank account if you're a man and you're married. But KRA officers actually don't need any court orders to access your bank account, and this is the reason why you will see them issuing assessments and attaching bank accounts. So that's something that has now been clarified. It's very clear that they actually do have the police powers. They can actually arrest you. And I remember there's an instance where, well, that was a long time ago though, some KRA officers went to one of our clients and the guys refused to open. And I actually didn't know that KRA had revenue protection police. And when we got there, or when my colleagues got there are these guys who are threatening to shoot the padlock out. So they actually do have police powers. So just beware what you tell them and how you're dealing with them. And of course, another interesting one was the extension of the amnesty to 2017 December. And I find this one interesting because although we are telling people you can bring back your revenues or your assets into Kenya from wherever they were, this is from my legal training. If you read the law, they actually didn't amend the Economic Crimes Act. So which means, for Revenue Authority purposes, we are very happy for you to bring back your money. But then under the Economic Crimes Act, you'll have to tell us where you got that money from in the first instance. So that, and perhaps some of the challenges in implementation of that law will not see the law, in my view, yield a lot. So that's the Tax Procedures Act. Now another one that we've seen coming through is withholding VAT regulations. Now, our amendments to the withholding VAT regime. Excuse me. Now, this withholding VAT, if you remember how it came about in 2004 the first time, was you had cowboy contractors who are not accounting for VAT. So somebody in policy decided the best thing to do is let's have an obligation to withhold VAT. And of course it created a big problem in terms of VAT refunds, and at some point in 2011 it was discontinued, but it's now back. And now, if you are appointed and the commissioner appoints, and I remember one of our clients was appointed and the financial controller walked all over the place asking who applied for us to be appointed. You don't need to apply to be appointed by the commissioner, he will just appoint you. So if you have been appointed, then you have to comply. Now the thing is, if you're in a VAT refund position for an extended period of time, you can then go back to the commissioner and say, hey, I'm in a VAT refund for an extended period of time, extended here being 24 months, and he will then deregister you. But my question as a tax consultant is, why does KRA have to stay with my money for 24 months before they deregister me? And I think we should actually engage and say this period needs to be brought down perhaps to about 12 months so that it's a reasonable period within which to figure out whether I'm still within a refund position so that I'm deregistered. Again, the law was very badly drafted in terms of the obligation to account for withholding VAT. In fact, if you read it, you could actually interpret it to mean that you're supposed to account for withholding VAT 14 days after you pay, which means if you pay on 1st of, say, July, then on 14th you need to remit the money to KRA. If you pay on 2nd, then after 14 days, which is 15th, you have to pay to KRA. But my view is that you could actually just pay it every 2 weeks. And again, you can also apply for an exemption to file it once a month. But that's withholding VAT. Now, an interesting one there, the Tax Appeals Tribunal amendment. You know, when this thing first came in, they were very ambitious. We are going to settle all our tax disputes within 90 days. Of course, that didn't happen. Some of these things are very complex. And, you know, when you're talking about things like transfer pricing. So they have now cleaned up the act and removed the thing about the 90 days. Although, if you do attend the tribunal, they are pushing for you to try and resolve these things as soon as possible. The one that I found also interesting recently was, I think it was 2 weeks or so back, that came in the Statute Law Miscellaneous Amendments Act. The reason why I'm saying I found this interesting is because generally as accountants, you would not be reading anything other than the Income Tax Acts or the Revenue Acts. So there you go. You have the Statute Law Miscellaneous Amendments Act, which brought in some interesting reliefs or benefits there. You can see 150% reduction on capital expenditure if you are doing LPG plants, and storage capacity of 15,000 metric tons. So those are some interesting ones that came in recently. So I guess the message there for us is you have to keep a lookout on other developments or other laws that have an impact in terms of taxes. In terms of Income Tax Act as well, sorry, this is not moved. Okay. So excess duty, still on the same law. We've had an exemption of school buses, for example, which are locally assembled. And like I said there before, the government introduces taxes on alcohol, and we can expect that again, for 1st July, they will increase the rates of alcohol as well. Then you've got the Miscellaneous Fees and Levies Act. Again, that's another act that we need to always be aware of in terms of how does it impact our day-to-day lives. One of the biggest issues that we're discussing today is our Income Tax Act. You'll know that that act was first implemented in Kenya at least in 1974. In fact, they call it the 1973 East Africa Income Tax Management Act. It's a very old act from 1973. Now, this act has been amended almost every year. There's been an amendment to the act. So what that has done is that it has made it a very complex piece of legislation. And in fact, in some instances, they've got provisions which contradict each other. So the government has decided that, look, it's about time we also amend or update our Income Tax Act. And one of the things that we are doing as ISPAC and the Public Finance Committee is engaging with National Treasury and the World Bank, because they're the ones who are consulting for government on some of these things, or at least advising government. And the question that we're asking is why do we actually need to review the Act? In fact, do we need to review or do we need to rewrite the Act? And one of the things that has come through from members is we need to make this Act a bit more simpler to implement, a bit more simpler to read and understand. We need to make it productive. It needs to support the economy, because if you look at the economy that we are operating in today, it's developed so much from the economy that was there in 1973. So that, for example, if you're talking about making it simple to comply, we've always had a problem with bad debt provisions for financial institutions, because don't forget that as a bank, you've got to comply with CBK prudential guidelines in terms of provisioning. You've got to comply with IFRS in terms of provisioning, and then when you come to Robert, you've got to comply with income tax provisioning rules. So it always leaves accountants baffled or waffled, in terms of what do I need to comply with. So we need to simplify that. In terms of making it productive, I'm reminded of a form that was published by, well, I guess this was, it's not real, but it was published by the Australian Tax Office, and had two instructions. The first one was actually a question: how much money do you make? Then, you indicate there, I make maybe 10,000 shillings. And then the second one was the instruction: send it all to us. So I guess we need to ensure that this act is productive, but not killing, the economy. Then we also have to ensure that this act embraces international best practice, because some of the things that we've seen in terms of developments, for example, on exported services, are real challenge, because when you look at the international best practice and what the law is proposing in Kenya, there's a big variance, and therefore it makes us as a country not very competitive. Again, you've got issues around IFRS developments, IFRS 9, IFRS 15 on revenue recognition. How does the Act align to some of these international developments so that we can simplify how it's implemented? But at the end of the day, what we are looking at is we want to consolidate all these amendments and remove some of these provisions, which, to my mind, they actually are a hassle. They're such a problem to comply with. If you talk about compensating tax, it's a real nightmare, because it doesn't make sense why you should be getting 150% investment allowance, and then you've got compensating tax issues on the other hand. So, we need to perhaps say that capital gains tax is 30% and we forget about compensating tax in that case. So my message to you is, please come out, let us hear you, let your voice be heard in terms of the new income tax bill, because you and I have an obligation to ensure that whatever act we come up with can sustain us for the next 40 or so years. Now, in terms of international development, there's this thing called base erosion and profit shifting, or BEPS. And essentially what this has done is, for the longest time, Africa always had its resources or profits extracted and perhaps benefiting the Western world. And this only came to light after the Western world also realized, oh, you actually have some very clever accountants and lawyers who can structure things around tax laws to ensure that you pay as minimal tax as you possibly can. So that's when this issue of base erosion and profit shifting came in. And effectively, the noise really reached crescendo in 2015 in August, where these countries came together and they said, look, we want to address gaps in international tax, particularly on transfer pricing, where we think that value is being eroded. And there are about 15 action points, but the ones that I thought were perhaps interesting was action point 11, which is about collecting data and analyzing that data just to see how effective or what's the economic impact. And in fact, if you think about analyzing that economic impact, you might be aware about what happened to Apple in Ireland. And Apple is a big corporation, so they went to the government of Ireland and they negotiated an effective tax rate of 1% or something like that. Now, in a country where you pay taxes at 12.5%, clearly paying 1% is a big issue, because you've got these multinationals which can twist governments. But the point there is, we want to look at the impact of some of these transactions and some of these arrangements and address some of those gaps. So you've got base erosion coming in. Action 12, disclosing aggressive tax positions. That's an interesting one, because what that does for a professional tax advisor, for you and I as an accountant, is to say, and I've seen Revenue Authority actually starting to pose some of these questions. What was the principal purpose of this transaction? Why did you do it? Did you do it just to avoid tax or just to minimize your tax liability? And if you look at the law, actually, our law, for example, the VAT Act, it does actually have those provisions. So which means that KRA can effectively come to you and say, I disagree with the way you structure this transaction, because the sole purpose, the sole reason why you're doing this is to minimize your VAT obligations. But again, I ask, tax planning, which is what I do for a living, there's nothing illegal about tax planning. If you guys whoever drafted the law, if they draft the law in such a manner that they leave gaps for guys who are lawyers and sharp accountants to come and look at that and structure transactions, whose problem really is it? But I guess that's something that we'll be discussing shortly. So you've got action 12 in terms of disclosing aggressive tax planning, and then action 13, which is transfer pricing documentation. So you've got all these regulations and requirements to file your transfer pricing policies at the group level, at the country level. And actually, if you go to some of these developed markets, for example, like the UK, they've got systems where now they are comparing how much tax are you paying in various jurisdictions that you operate in. For example, in these two revenue authorities are fighting over the same revenue. So the idea about this action plan is it gives taxpayers greater access to the mutual agreement procedure, which is what these revenue authorities come together to discuss and agree on who should take what. And then one of my favorite subjects here is action point 15, which generally talks about developing an instrument which will amend all the tax treaties. So, for example, Kenya has got a double tax avoidance agreement with the UK, which was signed, I think, 1973. And if you wanted to amend that treaty, you actually have to follow certain procedures from a legal perspective. Now, if you recall, in 2014, there was an amendment to our Income Tax Act, Section 42, which brought in what they call the limitation of benefit clause. And effectively, what that says is that you cannot benefit from the lower tax rates under the treaty unless you meet certain conditions. And the lawyer in me is asking, can you actually do that? Can Kenya actually do that? Can it amend a treaty unilaterally? And what this Action 15 is trying to do is to say, we're going to come up with one treaty which is going to amend all the treaties. You actually don't need to go and renegotiate all of them, so that you just have one instrument that amends all these treaties, and you can get all the amendments that you want in there. And if you recall, I think it was 2014 when India and Mauritius renegotiated their double tax treaty. What India did is that, and I realize we've got somebody from India here, and perhaps they can speak more to that. But what India did is that they simply went to Mauritius and said, if you want if you don't want us to terminate this double tax treaty, and see what are your obligations, particularly for those of you who've got operations that are cross-border, even in East Africa, you need to just watch that. Now, the moral dilemma. Clearly, dilemma. All right, sorry. The moral dilemma. Wow, okay. I need to avoid that. Tax planning and tax morality. Now, this is an interesting one because I'm not a Twitter guy, but if you've been following what's been happening in Europe, Lionel Messi, the Supreme Court, the appeals court, has confirmed his jail sentence, which is suspended, 21 months jail sentence. His crime, he went and set up structures that avoided paying certain tax. In fact, the tax amount was somewhere in the region of 4 million euros from branding rights. So the guy set up a structure that avoided paying tax on that. And of course, the revenue authorities caught up with him, and he was charged in court, which I suspect is going to be happening a lot more in Kenya, in my view. And the guy was handed down a 21-month sentence, which is suspended. The good thing about Spain is that if you are jailed for tax crimes for less than 2 years, you actually don't have to go to jail. You can serve a suspended sentence. But the idea there is he used certain tax havens, if you like, things like Belize or countries like Belize and Switzerland, to stash away some revenue that he earned and didn't pay tax on that. So he and his dad, of course, the law caught up with them, and to date, he's actually paid about 15 million euros in terms of back taxes and penalties, but is tax avoidance a crime? That's what we exist to do. That's what lawyers are there for. So that, for example, this is something that we can have a debate until the cows come home. If you look at Section 5 of the Income Tax Act, it talks about the value of a benefit. Now, which is 36,000 shillings, so that should be tax exempt. So if I was to be an aggressive tax advisor, I'd say, I'll give you 10 benefits, each of which will be less than 36,000, and we shouldn't pay tax on that because it's one benefit. Why did the draftsman decide to use they include the word "a" or the letter "a" in front of the benefit to qualify the benefit, as opposed to the value of benefits being in total 36,000 shillings? So when we look at the law and we look at some of those gaps, we have to start asking ourselves, are we actually doing the wrong thing? Are we doing something that is immoral? So in my view, tax avoidance is actually legal. We're looking at the law and looking at the gaps, but there's a question as to whether it's moral. Should we be paying all our taxes, particularly when you think about the situation in Africa in terms of debt? And there's a lot of, and you'll see it in the next slide, there's a lot of activism that is going on. If you go to the internet and look at the Tax Justice Network and Oxfam, those guys have done a lot of research in terms of the multinationals which are, squeezing revenue or denying African revenue authorities their rightful revenue. So there's a question as to whether that is tax avoidance is inherent theft. There's nothing illegal about it in the strict sense of the law, but is it immoral? And when I say that, again, just as by way of example, the government has said, or the policymaker has said, if you put up an investment which is 200 million shillings or more outside the cities of Nairobi, Mombasa, and Kisumu, then you get 150% deduction. So the question then becomes, Wrigley's, for example, is putting up a plant somewhere in Mlolongo. So Mlolongo is outside Nairobi County, and therefore I would argue that they qualify for 450% investment deduction. Is that illegal? Or should you be telling them that we're going to zone these places so that you can only invest in certain places so that you don't take advantage of some of those incentives? So at the end of the day, it really is a question of what's your risk appetite as an individual, as an advisor, as a business person, so that you then determine what do you really want to do. But even as we say that, there's still quite a bit of opportunities. I know the gap, the headroom for tax planning is narrowing, but still there's a lot of opportunities to still look at the law and just arrange your affairs in such a manner that you pay the least amount of tax possible. Speaking of tax transparency, there's a lot of awareness. A lot of people are, speaking about who should be paying. At the end of the day, there's a lot of activism that we are seeing out there. A lot of international cooperation. You've seen the BEPS issue. I know Kenya Revenue Authority is represented in this forum. These guys are cooperating immensely. In fact, unless you interact with them, you wouldn't know how far they are going. Because I was very shocked when I learned that they actually went to the Botswana Revenue Authority to upskill them on transfer pricing. It's absolutely insane. These guys, they're so good at what they are doing, they go out there to train others so that these other revenue authorities are also upskilled. And that's just an example. I mean, they've done the same thing to Ghana and what have you. And in fact, in transfer pricing, I think they are certainly one of the leading revenue authorities in Africa as far as transfer pricing is concerned. So there's a lot of cooperation, and we'll definitely see a lot of that coming through in East Africa. Tax reporting. I know that Revenue Authority is working on a form to disclose related party transactions, and I think, if I look at what has happened in Ethiopia, for example, today, if you are to file your tax return in Ethiopia, you actually have to disclose who you are trading with in terms of your related parties, how much they own or what's a related shareholding, what is a service that or transaction that you are engaging in, how much have you paid for it. So that when they come to audit you, they've got very, very particular information which they will come and look at. And I think that increased regulation and reporting is something that we all need to be aware of as tax advisors. And then tax and the brand, there's some entities who certainly don't want to be caught up in all this. I'd rather pay my taxes, however inefficient it will be, but I just don't want my brand to be compromised, especially in the court of public opinion. You will remember the case of Starbucks. After Starbucks not failed, but they structured their transactions such that they paid a minimal amount of tax in the UK. What did the Britons do? They simply boycotted their coffee. And they said, why should we be drinking Starbucks coffee, yet these guys are paying tax in Netherlands at a ridiculously low rate. So there's all this issue around what does the public perceive of you. And actually for Starbucks, what happened is that Starbucks ended up paying an additional £6 million in taxes. And I found it very interesting because they said, well, we don't believe that we've got any tax liability, but in the interests of justice, or in the interests of just putting this thing behind us, we're going to pay £6 million in taxes. But I always ask myself, if I didn't believe that there was a liability, why on earth would I be paying £6 million in taxes? And therefore, the question for you is, where do you strike the balance in terms of brand protection, in terms of public perception, in terms of tax transparency and planning? So I guess that's an open question. But for me, the balance would be paying the right amount of tax at the right time, no more, no less. So based on that, what do I think, what are my thoughts about your and my role as professional accountants? In my view, we're supposed to be tax planners. We're supposed to be assisting our clients in terms of tax planning. I don't believe that you don't get any marks for overpaying your taxes. In fact, in some countries like Tanzania, and I don't know whether we are represented here in Tanzania, but in some countries like Tanzania, if you have a tax overpayment, it's a real nightmare to get it back. The first thing you do is that you will precipitate an audit. You will get somebody to come and audit you before they give you back the overpayment, or before they allow you to utilize the overpayment. And therefore, your role and my role as tax professionals is to ensure that our taxpayers or our clients pay the right amount of tax at the right time. And part of that is tax planning. Compliance, that's what we've talked about, identifying what are your obligations, and this is the reason why I was saying we perhaps need to be on the lookout for some of these changes that are happening. Tax efficiency, this like it says there, goes hand in hand with planning, because at the end of the day, and this is what chief tax officers are now saying, we want to be as efficient as possible. It doesn't make sense for you to be having an effective tax rate of 50%, whereas the industry average, for example, of your industry is 28%. This has got to be something that is not efficiently working, and you need to look at that. So part of our roles is to ensure that our clients are operating efficiently from a tax perspective. Cash flow management, everybody knows that cash flow is king, or cash is king, and therefore it doesn't make sense that your client would be paying installment taxes, yet they have got advanced taxes, or they have got withholding taxes. It's always important to ensure that they pay just the right amount of tax that needs to be paid, and use some of these credits like withholding tax. Now, taxes is generally an emotive issue, because for those of us who are paying taxes, or taxpayers, you think that the government really doesn't do anything. It just collects and collects and collects. There's no quid pro quo. And of course, for the government agency which is charged with collection, and I really, I feel for them, because their job is to just collect. They think that they should be collecting much more. So there's always inherently a dispute or a disagreement between the taxpayer and the revenue authority. And therefore, your role as a professional advisor, or a professional for that matter, is to act as an intermediary with revenue authority. There'll always be a dispute whenever these issues are audited. And therefore, your role and my role is to come in and mediate, come in and arbitrate. And because tax litigation is so expensive, and this is the reason why perhaps they even came up with the alternative dispute resolution mechanism. Let's try and resolve these issues without necessarily going to the tribunal or without going to the court. So we are tax arbiters, and then just raising the awareness, and this is where ISPA comes in terms of training. This is where professionals come in terms of training. Just raising that awareness on what is happening in the world, or what is happening in Kenya, so that you're aware and you're not caught unawares. And some of those things, like we've talked about, the VAT regulations, which are out there, and I would invite you to come and to think about it, because they have got far-reaching implications. In fact, those VAT regulations, in my view, seriously need to be looked at. And even as an institute, we are looking at that, because if they are passed the way they are, then in terms of our exports as a country, we have a serious problem, in my view. And lastly, which is why you're here, I guess, is the tax trainings. Just ensure that you're up to date with some of these things, so that you don't get caught unawares. Thank you very much. That's my view of the role of professionals, and I guess in line with the annual seminar's theme, being the vanguard of public good. I guess my challenge to you is have a look at the law, have a look at the transactions, and try and get the middle ground and ensure that you don't get on the wrong side of the law. Thank you very much.
Can we give another round of applause? Excellent presentation, CPA and learned friend. I'll give a chance for questions. Or do you allow me to finish the story first? No, I think let's get questions from members. Then I'll conclude with the story. Thank you, Robert. He's taken us through the key issues of income tax, the statutes, and a lot of the issues that he has raised, touching on why do we need to review the Income Tax Act. He talked about base erosion, profit shifting, how we need to be keen on income tax issues. And one of the challenges that I had while seated there, when he was talking about the role of CPAs or professional CPAs in terms of tax. A lot of us members, we've been complaining that lawyers are taking our position. And this is mainly in terms of income tax. And I wondered how many accountants are keen in following up these regulations, the amendments that are coming up, so that we can advise our clients in the right way. So we need to be keen on these areas. We need to ensure we are updated with new developments, comply with them, ensure we are efficient in terms of tax planning, Also advise our employers in terms of tax payments and cash flow management. I don't want to belabor because he's brought the points home clearly. So I'll give chance for questions. We'll start with a round of 5 questions. There's one on my right. Yes, CPA Peter here. Kindly pass over the mic. Please tell us your name and go straight to the question because of time. Your name, organization, and then the question. We would also kindly request our member to stand so that we can see him as he asks the question.
Hello. Good afternoon. My name is CPA Madao. Thank you, Robert, for giving such a good overview. I'm just wondering what is wrong with us as a country, whether it is the accountants who are wrong, whether it is the lawyers who are wrong, or those who are good at doing legislation. If you look at the Income Tax Act, ever since I woke up and I started looking at things in a different way, every year, even in these seminars, we have always talked about the Income Tax Act, and nothing happens about it. So I would want Robert and those of us who are privileged to sit with the legislators, those of us who are at the council, what are the impediments that make things not to really work? Anytime you get some amendments here and there, you are advantaged because you have a legal mind, and you're also privileged to be an accountant. To some of us who are just purely accountants, you make these things very complex for an accountant, despite the fact that you'll add figures. Yes, they will add up, but you get caught up in the law. Look at the few pieces of legislation or some amendment that have come up. Look at the Capital Gains Act, the little amendment that was brought, and how confused it was. How confused it was. Even if you are to do the computations, you get very confused. Look at the compensating tax that he talked about. Very, very complex. Look at how careless the rule governing per diems, where some of you are here today. Yeah, if you look at that rule and you give it a legal interpretation, most of you here will be in jail of how you spend and accounted for that money. But because it is not clear, then everybody is really, really in trouble. Tax planning that you talked about, very complex. And one of the reasons that has been cited by scholars and experts like us is that the reasons why we have evasions and aggressive tax avoidance is because we have very complex tax laws. And we're seeing it every year out, and nothing happens. Thank you very much.
Thank you, CPA Madam. Next.
To highlight to us whether professional subscription should be paid. I mean, whether subscription should be taxed. Because I understand currently there's an emerging issue where all the professionals on their subscription, they should pay tax. Thank you.
Thank you, CPA Mokaya. That end.
Good afternoon. My name's are CPA Evans Asuga. I wanted to ask one question on taxation refunds. Normally, we know legally when you owe the government on tax, you pay fine on a yearly basis. But when they have a refund that they are supposed to do to you, there is no interest. As an accountant, you will tell that if they have had your money for 3 years, then they need to give you some interest, because if your tax was over and they are holding your money for that period, then you need to be given some interest on the same. So that's what I wanted to put across.
My name is Raymond Orol, CPA. Mine is on transfer pricing. Now, colleagues, you may know that Kenya as a country has lost quite a lot in transfer pricing. And when this practice was taking place, many of us were around. The lawyers like Robert were also around. Now the question is, was this a conspiracy between the government, maybe officials, experts and lawyers, to allow these crooks to move a lot of revenue from this country? Or what was happening? I mean, really, where was the weakness?
Thank you. We'll take the last question. Okay. I think Robert can.
Yeah, thank you very much for those questions. And I suppose maybe it's easier to start with CPA Raymond Olor's question here about transfer pricing. Around, Kenya has lost a lot, and was it really a conspiracy? In my view, it's not really a conspiracy. It was just a convergence of, shall you say, bad luck and bad drafting of the law. Because if you look at our Income Tax Act, as far back as I think 1985, 86, somewhere there, that amendment on transfer pricing was actually included, such that if you have transactions which are designed to give you a lower profit than you'd otherwise have made in an arm's length transaction, then Revenue Authority could have come and challenged you. And actually, that's what happened in 2005 with Unilever. They had this case where, as he then was Justice Al-Nasir Visram, ruled that yes, you have regulation, you have the provision of the law, but there are no guidelines about how to implement this, and therefore, if a taxpayer has come up with their own way of implementing it, which follows international best practice, then that is acceptable. And that's the reason why in June 2006 or July 2006, you saw the transfer pricing rules come into place. But again, even then, they are very simple rules, the way they have been drafted. And in my view, it's still a challenge how to implement it. And I think what needs to happen as a profession, as a country, is we all need to come together and look at what is the best way to do this. Because, for example, Kenya introduced transfer pricing in 2006, Uganda 2011, Tanzania 2014, I think Nigeria 2012 or something like that. And if you look at the Uganda regulations, the Nigeria regulations, they're very detailed. And in fact, they're so detailed that they've got some of the international best practice. They've adopted some of the international best practice, for example, what they call safe harbors. Because one of the biggest problems with transfer pricing is that it's so expensive to implement. It's so expensive to do these studies. So instead of having to do a study for each and everything, then we should come up with a rule that says, if I make up to 5% on, or I pay up to 5% margin on this kind of transactions, then that should be deemed to be an arm's length transaction. I don't know whether we're going to see that, but I hope that even as we go through the income tax amendments or the overhaul of the Income Tax Act, some of these things are going to start filtering through, because that's what we need. That's what we need to hear, so that we can also try and influence policy. But in my view, there are just structural weaknesses in our law, and we were caught out once, and in my view, we shouldn't get caught out again. So it's not really... I wouldn't say it's a conspiracy. Maybe somebody slept on the job, but there's certainly not a conspiracy. Then, I think that speaks to what CPA Madao was talking about, what's wrong with lawyers and accountants. I think, in my view, and I think Bwana here alluded to that, we all need to come out, and I'm, like you said, I'm lucky to be an accountant and an advocate as well, and therefore I play in both fields. But as accountants, we all need to come out and say we are reclaiming this profession. The thing about it is that lawyers generally like numbers. The same way accountants generally don't like prose. You don't like reading cases and stuff like that. And it's a given. So I think we all need to come out and say the minute we sell the sale agreement and I file for the transfer of the title from your name into my name, then you're the one who's selling to me, so you're supposed to pay the capital gains tax. Now the question that arises is, have you even realized again, has this sale completed? What happens if I don't manage to give you the full purchase price, yet you'll have paid the capital gains tax? What happens if I do a search and we realize that, in fact, this is government land, or this is public land, and I shouldn't even be buying it, yet you've already paid the capital gains tax? So there's a big issue around how some of these regulations and rules are crafted, and it's our responsibility to engage with policymakers to ensure that we come up with rules that are workable. Today, the High Court ruled, or not today, but recently the High Court ruled that you pay capital gains tax after the conclusion of the transaction, which makes a lot of sense, because at that point, the title is in my name, I give you your balance, and then you can go and pay. Now, if you tell me to pay before we conclude the transaction, in fact, I might not even have money to finance that capital gains tax in the first instance. And don't forget, KRA are the guys who are collecting the stamp duty. So the minute you file your stamp duty forms, I think they are SD1s, then they know that Robert is selling this property, so they can clearly follow you up. So what is all this issue around paying tax before the transaction is completed? And I think the lawyers definitely on that account, they beat us as accountants. But my point is, we should ensure that we participate in this process, so that we simplify and we clarify the tax obligations as accountants. And you talked about the tax laws, complex tax laws leading to evasion. Generally lawyers, we like sounding very learned, and hence the name, my learned friend and what have you. Historically, obviously, they were very learned. Not to say that they are not learned now, but historically, you couldn't do law as a first degree. But the point is, lawyers generally like making things complex. So if we as accountants understand the issue, we can clearly drive that agenda and make the changes that we want to see. Tax refunds, I think it was CPA Evans Asuga. There was actually mention of interest on overdue refunds, and I am aware that as an institute we have been trying to get these amendments into the law, but they have never seen the light of day. But my view is that if Revenue Authority is staying with your money, surely the least that they can do is give you interest. They should pay you interest, because you'd otherwise have used that money or invested that money to earn some income. And in fact, if you look at Ethiopia as an example of a jurisdiction that has properly implemented this, and even Rwanda, I believe, there was a gentleman from Rwanda. If the Revenue Authority owes you a refund and they don't give you your refund on time, they pay you interest. And particularly in Rwanda, these guys, like on 30th of the month, they will work day and night to ensure that you get your refund, because he doesn't want to go and explain to his boss why they are paying you interest on that overdue refund. And I think we need to have something like that. The only problem, of course, in our country is you've got to distinguish between the exchequer or the national treasury, which collects, which is the one which is responsible for paying out, and Kenya Revenue Authority, which is a collection agency. And that's a distinction that we all need to understand, because KRA's business is to collect revenue. In fact, at one time they'll tell you that the R means for revenue, not refund. So their business is to collect revenue. Now, they also are given funds to disperse to taxpayers as refunds. But until and unless they're given by the National Treasury, there's nothing they can do. And that's the saddest bit about this. So in as much as they owe you a refund, for as long as they don't have financing from Treasury, then they will not be able to pay you. And maybe that's something that we perhaps need to think about in terms of administratively. Should Revenue Authority just be collecting and then refunding whatever is due and remitting the balance to the National Treasury or to the Exchequer? So, but that's definitely something to continue fighting about or to continue talking about, because there are countries which are paying interest on overdue tax refunds the same way that you get penalized when your taxes are late. On the last question is it basically asks me for my professional opinion, and I generally I stay away from giving.
Thank you so much, our learned friend CPA Robert. Because of time, I'll only allow for very burning question, if any. Okay, scanning across the floor, I can see silence means consent. People are satisfied with the explanations and response to the questions. Somebody has lit fire. Okay, just one kindly as we close.
This is CPA Robert Wuihiu. I want to ask about the benefits. You've talked about 36,000 to be taxed. So now that we are coming from this seminar, should we start deducting if there's a benefit of 36,000, and who is supposed to implement this rule, assuming that you've not been deducting a tax benefit, because the government has not given a guideline. So who is on the wrong and who is supposed to be doing this?
Thank you.
CPA Robert Wuihiu. Yes. So if you look at section 5.2, it actually talks about the value of a benefit, not the value of benefits, being 36,000. So where you have been accorded a benefit which is less than 36,000 shillings. So for example, let's say you work for Nakumat and you get a gift voucher for say 20,000 shillings. That non-cash benefit, provided it does not exceed 36,000 shillings, would not be a taxable benefit. The issue here becomes where you've got multiple benefits. So you get the voucher for 36,000, then maybe your employer pays for you a holiday with your family for 35,000, and then something like that. So in aggregate, certainly your benefits exceed 36,000 shillings, but when looked at individually, none of them exceeds the 36,000 shillings. So my interpretation of that provision of the Income Tax Act, and I agree it's an aggressive position, but my interpretation of that is whoever drafted that law must have known very well what they were doing when they indicated a benefit, as opposed to saying the value of benefits does not exceed 36,000 shillings. And when my English teacher tells me that when you look at that kind of writing, it says you look at each benefit as a standalone, and therefore in my view, those two benefits should not be aggregated and you be subjected to tax on that. You're supposed to look at them separately. And I accept that people might have different views and interpretations of that. So who will implement? I guess it's you as a CPA or the accountant or the financial controller in your organization who is going to look at the law and say, in my
A round of applause. Thank you so much, CPA, for that excellent presentation and explanation. As we close, I'll refer back to the story of John. The mother did the DNA and found that John's DNA results were different from the parents. And she disclosed to the father, and the father said, it is true. You remember the day you told me to change the baby? I actually went to the nursery and got a clean baby. So the question is, in our workplaces, as the boss, how do you give instructions? Do you ensure that the instructions you give are clear? If you say, go and change the baby, is that sufficient? Are the people who are given instructions, do you take time, internal auditors who verify the books of accounts, do you go by the instructions to check were they followed to the letter? Internal controls, were they followed properly? Yes, so that is the lesson learned from that. As we close, we have a memento to give to CPA Robert for the excellent job. I'll request to come on stage CPA Ann Wangeshi. CPA Ann Wangeshi is the chair lady, Central Reef branch. She's a very key branch to the institute. Kindly, Robert, come over to the stage. Another round of applause. Thank you so much, Robert, for the excellent presentation. We'll share the PowerPoints with the members so you can check in the website and you'll get all the information. Sorry to take your time. I know this is what is standing between you and the lunch. My name, as you had been told, is CPA Samuel Okello Alala. I serve in council. I appreciate your support.
The invoice. Download attached publications. Read journals. Watch live channels and recordings. Update personal information. View CPD details. Ask